What's going on, guys? We're going to be taking a look at the Nasdaq futures. What I have pulled up is the 5-minute time frame on the E-mini Nasdaq 100, which is ticker symbol NQ. Now, if you guys have been following my easy future strategy, you guys would already know that I'm kind of looking at plays that are crossing over the 20 SMA, crossing below the 20 SMA. We're kind of waiting for those confirmations, and then we're kind of getting in, taking profits if we're going long into the next supply zone, or if we're going short into that next demand zone. So if we quickly go to kind of where the market opens, we can see here that in pre-market futures were pulling back slightly, but we do have a lot of support here. We had this 50 EMA or 50 SMA on the 5-minute time frame. You can see we quickly lost it here. So what we would have been looking for essentially off the bell is a confirmation short through these levels here to kind of confirm, get a 5-minute candle close below that, and then look to jump that entry. However, we did not close below that price point, below the 50 SMA. You can quickly see here at 6:30 a.m. we put in a massive green candle, which is what you want to see. Now, again, if you're a newer trader, those trades within the first minute, 30 seconds, 2 minutes, 5 minutes, even after the bell can be very, very volatile. So if you need to kind of let the first 5 minutes of the market play out, I would definitely recommend to do that. Now, you can see that we do clear out all of this supply here. The chart looks very, very congested. You can see dozens of lines here, the 50, the 200, the 100, the 5, the 10, the 20. You may be thinking, how do I exactly know when to get in? How do I know, whether I should be going long or short? Should I buy into this move here? What you would be essentially waiting to do here is wait for this candle to close back over the 20 SMA, which it does here off the first 5 minutes of the bell. Next thing you would do would be to put a entry level here above this pivot point. So the pivot point would be 15,275, and you would be looking for the next 5-minute candle to confirm this candle that closes above all of this supply zone, and this is a scalp position you're looking to take. Now, your stop loss, again, my strategy is going to be a little bit different. Okay, so let me kind of explain my strategy and how I use these stop losses. Sometimes you'll hear people say, risk 0.5 per trade, risk 1% per trade, risk 2% per trade. I do not put a hard dollar amount on how much I'm risking. My stop loss is based on levels of supply and demand, depending on whether I'm going long or short in the chart. So my stop loss, yes, is going to be different. I'm going to lose a different amount of money. So for example, for all of you prop firm futures traders, those of you guys who are on prop firms, let's say you have a $50,000 prop firm account. I essentially don't use a hard stop of, let's say, 1 or 2%. Say I'm not going to, stop out at $250 or $550, because that's all relevant on your position sizing. So if you're playing, 1 or 2 mini contracts, that 250 could get stopped out and it could still go in your favor. So you might want to, size down, play some micros. What I like to use is levels. So for me, my stop loss on a particular play like this, we close over the 20. I'm going to look to see where is my 5 and 10-day moving average. My hard stop is a close below the 20 period moving average. Okay, it's very, very simple. So however much I lose is going to depend on my hard stop of closing back below the 20 period moving average. Now, if you're someone who is going to get into this play, for example, long, you're going to hold it for 5, 10, 15 minutes, see it spike, put in a new high of day, and continue to hold on the drawdown and get stopped out down here at 6:55 in the morning Pacific Standard Time, and take your account from green to then red, and then kind of be pulling your hair out wondering, why didn't this continue to move? It's going to be dependent on, what I'm trying to say is, your position size. So for example, if you're someone who's looking to lose maybe $200, $300, $400 per trade, you're going to want to catch these extended moves. You're not necessarily going to be wanting to play 3, 4, 5, 10 mini contracts. You're going to want to maybe play 2, 3, 4, 5 max micro contracts. That way, even if you're inexperienced enough to know or not to know to take profits on this new high of day print here, and you do hold through the drawback, that this particular move is not going to kill you. Because for example, our entry price was a confirmation over 15,274, and the price closes below the 20 down here at 15,227. So this is a 40-point drop, almost a 35-40 point drop. Now if you're playing mini contracts, this can be absolutely devastating to your account. So you want to size correctly. One contract would put you down on micros maybe $50, $60. Two contracts would put you down about 120, 150. Three contracts maybe 200, 220. So if you're looking to maybe lose that sweet spot of $200, $300, $400 a particular trade, then stick with the micro contracts with that ticker symbol is going to be MNQ, and play no more than 4 or 5 contracts max on the micros. Please trust me when I tell you this. Now, if you're a scalper and you kind of understand that you're looking to take profits 2-3 pushes higher, you're looking for 10 points, 15 points, 20 points, this would be a fantastic trade. Look at the entry point on this at 15,274. We get our first push higher that closes at 15,285. So we go from a price of 15,274 to 285, which is 10 points in a matter of 5 minutes. If you're looking to play minis and you're looking to scalp 5-10 points, this is the move where you're going to want to be taking profits. Let's say, for example, you are playing micros and 10 points is not sufficient enough for you to want to take those profits. Let's say you're taking 1 or 2 contracts on the micros. On the micro side of things, this might be only a 20-30 point move, depending on how many contracts you're playing. You might need that 2 or 3 push higher before you're going to take those profits. Okay, follow along very closely here. So the next candle closes red, however, spikes up to a price of 291, which is another 5 points. Technically, from your entry point, you would have been up 15 points. So 15 points was enough for you to kind of take those profits. Make sure you're taking profits again. And then we do get the candle close, but I want to tell you one reason why we're not going to get scared, concerned, or worried on this red candle close, because we're still holding our 5 and 10 day moving average. Now for me, the 5 and 10 day moving average is going to be kind of my short term kind of, soft stop out. If we were to close below the 5, I'm going to reevaluate this trade and say how much room down until the next support, which is my 10 day moving average. In that case, I'm going to kind of factor in my risk. Is it worth it for me? Should I just get out of the trade? If it closes below the 10, I'll do the same thing with the 20, and the 20 is my hard stop. Remember, 20 is always my hard stop depending on my position sizing here. If I'm playing micros, I have no concerns here to get out of this trade, even though the candle does close red. You can see we then put in a new high price here to 15,309, 15,310. So from an entry point of 7.4 to 310 is almost a 25-30 point move. Now you have to understand, if you're scalping, if you're day trading futures, if you get 10 points, start taking profits. If you get 15 points, start taking profits. If you get 20, start taking profits. Anything over 25, consider that a home run trade. Just trust me, the more times you can take 10, 15, 20, 25 points out of the market on the future side of things is a hell of a trade. We're not trying to sit here all day and catch a 100-point move, because there's going to be multiple setups. Look at the next setup that comes at 655. We get that close below the 20 SMA here, and then we do get our confirmation that comes down to the Bollinger Band. Why does it bounce here? Bollinger Band, guys. Why do I have so many supply and demand zones? Because I want to potentially know where these stocks can stop. From there, I can see and try to identify, are these trades worth my time? Is there enough room in the trade for me? Meaning that if we're confirming long or short, do I have enough room? Do I have 10, 15, 20 points down to my next demand zone or next supply zone so I can take this trade? Okay. I also want to know that if I do get short off this move here from a price below this 20 period moving average of around 15,222 all the way down to 15,204, that's a 10, 12, 13 point run. Do I have enough room to scalp that move? If I do, and that's worth it to me, I'll take that trade. Now, if I'm going to sell out half of my position, sell out a quarter position here, and I'm going to hold, I'm going to look towards my stop loss. What is my stop loss? A close back over the 5 or 10 day moving average, and a hard stop being over that 20 period moving average. That's exactly how I'm going to play this. I'm going to have to sit through a little bit of drawdown here on my runners as it re-attempts to test the 20 and 10 day moving average. But you can see here, go to your charts now, you can see here at 7:10 a.m. Pacific Standard Time, which is going to be 10:10 Eastern Time, we do come up and test the 20 and the 10 day moving average before getting rejected and starting starting to put in new lows. This second short trade was an absolute monster. Some of the guys in Evolution Traders took SPY and took SPX shorts. Those of them who play options, those of those who play futures would know to take this trade and continue to hold this trade all the way down here. Now, when are we looking to take profits here? Like I said, 15, 20, 25, 30 points. Those are fantastic trades on the futures. So if we can kind of see here from an entry point of 15,223 all the way down to just about 20 minutes later, we come down to a price of 15,180. So you can see that's a 25, 30 point move. I would be looking to sell on this red bar as we start to take out the previous lows here. You can see the little bit of a double bottom here. Once we clear out that double bottom, we come down and we kind of test and ride this lower Bollinger Band. We actually go from a price of 15,178 all the way down on the next 5-minute candle to 15,151, another 20 points here. So if you would have scaled out half position on this candle here, held half runners going down here, you would have essentially caught a 30, 40 point move on the Nasdaq futures in a matter of 20, 30 minutes. So if we look at the entry point here at 6:55, we're looking for the confirmation at 7 a.m. We're looking to take this 7 a.m. candle. 1, 2, 3, 4 candles, which is 20 minutes later, we go down about 30, 40, 50 points, depending on when you're scaling out. This is exactly how I'm going to play it each and every single day. It doesn't matter if you're playing options. It doesn't matter if you're playing stocks. I read the charts all the same way. This video has a lot of information kind of packed in there. If you guys are looking to get a little bit more detailed, you're looking to get a little bit more focused, maybe you want some one-on-one coaching on how I'm using this particular strategy, make sure you guys join evolutiontraders.com. That's my personal website where you're going to get access to my 2 video courses. You're going to get access to live trading and live chat with the rest of the gang. Also, if you guys just want to join the Discord, maybe kind of pop in there to kind of, field around and ask some general questions, right? You're not going to see all of the channels. You're not going to see all of the live trading, but you can kind of pop in there and kind of poke your head around, join the family. Definitely join the Discord. That link is down in the description box below. If you guys are looking to get funded, I work with a couple of great prop firms. Those are all listed as well. I'll see you guys on the next video.